back again with another video. It's been a little while, but just going through some computer issues and trying to get everything back up together and running right. So, got everything straightened out the way I like it and the way I need it. Now I can get back to trying to make some videos for you guys. But first, before we even get started, I just want to make sure you guys know about my website. We got this website. It's fxatOneglance.com. Okay, and here's the homepage here. But there's a lot of things here that are useful for you guys if you're trying to learn about Ichimoku. So you could come here and meet the team, and then you've another heading all about Ichimoku. Then we have our Ichimoku courses where we have an online video course, and we have the Ichimoku mentoring that we do once a month. Also, we have a blog here. You could look at the blog, come on the blog. Now, a lot of the stuff on the blog is for members only. So if you go to the blog, you'll see it'll say members only, but there's a lot of things on here where I do post for everyone where it'll say all access. So that would be for anyone. So I try to keep it so people that aren't paying still can learn a lot of stuff from just coming to the site and joining as a free member. Also, the members have the home course videos, and then they have the 7 day Ichimoku weekly forecast, and then some other educational videos that we post about Ichimoku and other things such as price action or whatever it is that we're really trying to focus on to help our trading. The 7 day Ichimoku forecast, we have that every week. We post about the markets. I post about 28 pairs looking at all the markets, and then we have the home course videos, of course. But the 7 day Ichimoku forecast, also we have webinars where we'll have that every, the beginning of the week, and we'll have a webinar, and it'll focus on the all the pairs, and we'll look at those and run through those, looking at the Ichimoku. Then you could come here. This is a free section here where you could come to where it says Chaos Trader 63 forum. If you click on that, it'll take you to our forum. You'll have to sign up for a free membership. You could sign up and have a free membership here and post. This is the free section here. So up here where it says all about Ichimoku, all this up here is free. So you can come in here and post. And then down here, this is all for the home course members. So you'll see all the things for the home course members down here. And everyone who's a member from the home course, they post in this section. So if you're when you come online and you join, if you're a free member, you won't see this bottom section. You'll just see the top. And then you could see here we have like 1300 members, 1343 members, and over 1100 topics posted. So we have a lot of information here. So it's very good for you guys if you're trying to learn about Ichimoku. Okay, so I just wanted to make sure everybody knew about that, because I know some people probably don't know about the site. So let's go right to the charts. We're going to start out here looking at the euro US dollar on the daily time frame. So looking at that on the daily time frame, basically we had a Kumo breakout here. So the breakout was not valid because we didn't have our crossover here, so our future was still dark, and it looks like the overall market bias is bearish. So in order to just break that primary trend, it's going to be tough for the market. The market doesn't usually just come down to a level and just violate the cloud and continue higher and higher. A lot of times you'll see this action where price comes down, and then you'll get into a range and then finally go to the upside or continue with the downward momentum. Now, is this just going to be a pullback? Is it going to just be a pullback to this level and then price continues lower? I mean, we don't really know yet. So we'll go to the lower time frame. The 4 hour will tell us a lot of what's going to happen, because things that start a trend starts from the lower time frame and works its way up to the higher time frame. You get the overall picture of the market with the bigger time frame. So the daily will give you 24 hours of what's happened on all the with your pair that you're looking at, with all the market open. So you'll look at that on your daily time frame, and you'll be able to see what's really happening with the market. Now, when we're looking at this pair here, you could see we had the Kumo breakout. Now, the signals are we want to have price above the cloud. That's the one thing you need, that. And then you need to have your crossover. Your future has to be bright or dark. So I usually call this a dark future coming down and a bright future up. So that'll be a Kumo twist there. You have to have a bright future. So your Kumo twist has to be bullish. here it's just starting to turn over, so it's not quite bullish yet. And you see what's happening with the market, and also the market's found resistance up here, but we didn't get that turnover yet. So you can't take this trade. You shouldn't have taken this trade, because if you did, you could see what's happening with this trade. You also need to have a bullish TK crossover, and here it is right here. This was a bullish TK crossover as your Tenkan-sen went above your Kijin-sen. Then you need Chiku span to be above price, and it is above that price. So this lets you know that for the past 26 periods, you've been moving higher than the previous 26 periods, and that's where you started to break out here. So that lets you know that you're possibly in starting a move higher. Lets you know you're not in a range. So seeing Chiku span above that price means you've moved higher over the past 26 periods. So that's important. So over the last 26 days, we're higher than we were 26 days prior. All right. So with the breakout here, I'm looking for to get into a trade. We need the market to pull back to some certain levels. Now, there's levels that we teach the inner trades, and we can enter a long trade once we see it hit that level and we see some price action. But if we don't get that level and price action that we need, then we go to our next level, and then we're looking at price either coming down into our zone here. You could also bounce off of the Kumo, off of the top of the Kumo here. So you have to be prepared. It's better to get in on a smaller time frame. So we'll see the bounce off of this level maybe, where I have this zone here. This is our retrace zone. And then if we violate that level, then we may look at a retrace down here. This is another level at 109.050 where I have my daily Kijin Sen right here, and then a violation of that, then I think the market will be back in a downtrend. You'll see the market continue to follow the primary trend and just continue lower. We'll have a Kumo breakout to the downside, and I'll look for the market to maybe at least go down to this level, the previous month's low, which is 105.203. We're finding currently bouncing off of the top of this previous month high, which is 112.661. All right, so to look to get into a trade, what are we looking at to get into a trade here? So I'm going down to the 4 hour time frame. Right now, looks like there's a couple things that have me worried about a trade here. First of all, the structure of the market. I can see the structure of the market starting to change, and we're starting to violate some levels that we really look at to determine the structure of the market. So now we're pulled back to this Kijinsen here. Kijinsen's a nice level to find support and maybe look for a trade. Now, if we violate that level, like I said, we'll look at our zone here. This is going to be a good pullback zone. So then if we violate that level, guys, then we just look for this next level where we're going to look to go long. And then we know where the bias has automatically changed. If we get a Kumo breakout to the downside, then we just take that Kumo breakout to the downside. And what will that do? That will keep us right in the line basically with the daily time frame, because the daily primary trend is bullish. I mean bearish, sorry. It's bearish, but we do have a move here, so we don't know if this correction, how big this correction can be. So therefore we're in the middle of the of understanding what's going to happen with this market. So in order to really see what may happen, we need to see us violate this level up here. All right, so I go back to my 4 hour chart where I'm trading, and if I get a violation of that level, okay, then I could start thinking about trading to the top side, trading this long. And also if I bounce off of this Kijinsen, I can look for a long trade here. So right now we're between two fractals. We need to get above or start breaking below that level, and then we'll start to get a better understanding of what the market's doing. Right now you can't really trade what you see here. Maybe if you're a day trader, you might trade some of this stuff, but the market's not telling me anything here with a red candle, green candle, red, green, all different things happening here. Nothing really decisive to take a trade on. So if you take this kind of a trade, I don't really think it's beneficial. It's not a good trade to really jump into. All right, so I'm just going to wait for my levels. I need price to get to levels to prove to me what's going on with the market. So a violation of this upper level here will be very important, okay? And that'll let us know that we're starting to move. That's what Ichimoku wants to see. He wants to see us moving. When we start getting into a range, we're not doing much with Ichimoku, and it really becomes non-void for us. We can't really use it. So we start to look more at the support and resistance levels. Now, if we see price violate this Kijinsen and find support down in this area, then we'll look for the bounce to go longer here. And then again, like I said, we'll look for a bounce here. If we violate these levels, because this is going to be the 50% retracement level of the prior move off of the daily time frame. So, the market still has the possibility of moving back down to this 50% retracement level. But once we break this level and violate this cloud again, like I said, I think this market's going to be right back with the main structure and follow this thing down to the downside, at least looking at getting down to this level near here, 105, 431, and even lower maybe. All right, so that's the Euro US dollar. We're going to go on to the US dollar yen, one of my toughest pairs to trade. So let's look at the dollar yen. Okay, so the US dollar yen here on the daily time frame, we might be quick with this one because you could see here pretty much this is in a range. Everything is flat. You cannot use Ichimoku with this. You could see this is our pretty much the lower level of the range. You may even want to look at maybe bringing it up to this level here. So we're still in a range. It doesn't matter. And this is the top of the range here. So looking at being in a range, Ichimoku, you definitely cannot trade Ichimoku. You could see what's happening here. You got a lot of crossovers. You got uh, price bouncing out of the cloud, inside the cloud, below the cloud, and above the cloud. Even here, you have a breakout above the cloud. Okay, so you see price breaking above the cloud. It's not valid. This is invalid because, first of all, your TK crossover is bearish while you're having a bullish break of the cloud. Then Chiku span is slightly above this price here, but it needs to break above this whole area. So Chiku span is pretty much, you might as well call that inside a price where that lets us know we're ranging. Also, our future is bearish while we have a bullish breakout. And then that's it really. Nothing, this is not in a line with anything that Ichimoku is showing us. So therefore, you can't really use Ichimoku in this kind of environment. And you could see that using it here, it probably would have stopped you from taking some of these bad trades. But if you're a new trader trying to trade Ichimoku and you don't follow rules or know about it, you'll take these breakouts and you'll wonder why Ichimoku's not working well. You have to realize what the market looks like, what the structure of the market is, and everything of that nature. So not knowing those things, you'll take some of these trades and wonder why it doesn't work and say it's no good and give it up. All right. So we'll go to the smaller time frame. It'll probably look a little different. So on a smaller time frame, you can trade Ichimoku here, but it's kind of sloppy and I really don't like it. When I look at a chart and the price action is not really defined or clear or good, and you see all these breakouts to the upside and downside, you don't want to trade any of that. The market's not really moving. Again, it's showing you kind of like a range. You have a couple trends here, but nothing really major. And then myself, I don't really have all these components on my chart when I'm trading. I usually take these off and just have the Kijinsen on here, but I do follow the rules still. It's just that I know where these things already are happening because I've been trading it for quite a while. But now if we're going to look at this, we could look at levels that we need to violate to start looking at price moving higher or lower. So if you're looking at Ichimoku in this environment, and you can trade this here because we're not really in the big range here with this we're in a bigger range here with the 4 hour time frame, so you could look at what's happening here and you need to break this level here. So even if I wasn't trading Ichimoku and I take this off of my chart, right, so let's remove it from the chart. Now I'm looking at support and resistance levels. So where would I need to go to in order to start trading higher? Okay, so it looks like price consolidated here. So quite naturally you want to get above this level or below the level to start trading this market, and then you would start looking for your next support and resistance level. So what I would look for myself, basically we're pretty in line with this previous month's high, so we could even keep that as our level. So if price violates this upper level here, the previous week's high, then we will look for it to attack this level up here at 127.97. And if we can violate this area here and come to the downside, then we may start looking for price to maybe reach back down here somewhere, get closer to this level. So I might start looking at overall movement down to this level, quite possibly down here, before I start looking at taking profit. Okay, but being that we're in such a big trend, a little trend on the daily time frame, you could see. So we go back to that daily, and you could see the market moves between these levels pretty much while it's in the range. So we're looking at it maybe getting up to this level. If it can't get back up there, look at it coming back down to this support level. Maybe we can move this down a little bit and find more support here. So this will be a level you're looking at, 118,464. If we violate that, then we see price come down to this level, 116,195, and then a violation of that, then we could start really looking at this pair breaking out of this range and starting to move. And then we need to violate this upper level to see the price start to really move at 121,519. And until then, it's pretty much in a range here and just going back and forth, and very bad price action to really trade. You can't see really what's happening here. Now, just bouncing off of the tops of these levels, you could take these trades here all day long until you get a violation of these levels that I have mentioned. And then once you start trending, then you can throw Ichimoku back on your chart. But until then, Ichimoku is no good for you. You might as well start using support and resistance, and so, or something to that nature. I like to use support and resistance as I start using these upper levels and lower levels of the range, and this level here that's within the smaller range. So that's what we're looking at here. I know we got away from Ichimoku there, but it's a good lesson to know that if you start seeing you're in a range, you might as well just ditch Ichimoku and start trading a different way, because you got to have more than one gun in your hoister. You got to have something else that you trade. So your toolbox should be loaded with a couple things that you really like to trade for different situations. So the market structure changes, the market situation changes. Here the market was moving higher, so you're in an uptrend, but now the market's going sideways. You can't trade the market the same way here and here. You can't trade it the same way in both conditions. The market condition has changed, so now it's flattened out. You have to find another way to trade it. So I used one tool here. Now I'm going to use a different tool here, but you have to be able to find out and see the market structure and realize that you're in that range. If you don't realize that until too late, you probably done burned up most of the profit that you got here. So understanding that market structure is very important. And when I'm trading Ichimoku, it's not just about seeing these signals and then jumping into a trade. It's more than that, way more than that, because I really don't want to just say, well, I'm just trading signals. I can trade automated to do something like that where I really don't want to. I want to trade more to the point where I'm using my technical analysis and the things that I'm looking at, the market, the price action, and all that to trade. And I mix that with the Ichimoku signals to get into a trade, looking at certain levels where I want to trade and levels that I know are holding that support and resistance, even looking at supply and demand levels. But I'm not going to get too deep into that right now. This is just looking at these major pairs for the upcoming week. So right now with this pair, I see this staying in the range. We may look at hitting the top of this level here up at the top of the range and then see what happens then. But until then, there's nothing really to trade with this US dollar yen. All right, so I'm going to move on and go to the next pair, which will be the pound US dollar. All right, so let's take a look at this pound dollar pair. It's going to be a very interesting pair this week, and you may not want to really mess with it until after these events happen. And because right now we got a few things that are happening. We're going to see Thursday the UK general election, which is going to cause a stir in the market. And up until Thursday, you may not find price doing anything. Price may just sit around here and just stay in a small little range and consolidate or whatever, because you had a nice gain off of the previous low, the 5-year low down here at 145,658, which happened like on April the 13th. So this was the 5-year low, and then the market moved higher, moved up to this level here, up about pretty close to 155, 126 in that area. Hit that previous month high at 154,987. Okay, but then we lost all those gains. Price fell back. Now we're finding support here. The support level is sitting at 159.28. This is going to be the bottom of the cloud, and everything on Ichimoku right now is showing us that this is bullish. But still, remember, there's a lot of news to come out for this pair that may hinder us. So with that, knowing that, there may be a few things that we want to look at here. Price may just sit in this area here, so we might not see too much movement. But I made these two lines. I made this darker line here at 159.28 and 1.5000. That's going to be the bottom of the cloud and the top of the cloud. A violation of these levels, we can see this pair fall for a good fall here, because it may get back in line with the previous primary trend here. We just had a little breakout here of this trend. Is this just a pullback of this trend? Are we just getting a big correction here? We'll see. But in order to get into a trade, we want to go down to the lower time frame. Now we're not going to be in line with the daily time frame when we go down to the lower time frame here, because we're now inside the cloud. We're starting to show signs of breakdown. Okay, you could see we have a bearish TK crossover. Our future is just twisting. We're getting ready to be bearish here. Price is inside the cloud. Chiku spans below the price. This is all signs of a bearish breakdown here. If we get price to close outside of the cloud, then we have a Kumo breakout. All signals would be good to violate this Kumo breakout. So that would be below 150.928. If you get a close below that level, I would take this trade to the downside, because with the news coming out uh, this week, pretty much the election, I think this pair is going to be pretty weak until we see what happens. And you could see we started to consolidate here already. We haven't really done much, but if we get a close below this level here, I would really take the trade and take this down, because you're going to see this pair maybe fall even further. A break below this level here at the 1.5 level, that would mean a breakdown of the daily chart. So you'd see a breakdown of the daily price level, and that would drop down below this level. You'd be right in the line for the same thing, catching up with that 4 hour time frame. You'd jump in there a little earlier as price breaks down and falls down. So I would look for that. This breakout here would be a nice opportunity to take this short. You would probably want to put your stop losses a few places. Now, if you get a breakout here, depending on how the breakout goes, we have this level at 1.50928. You could put your stop loss a little above that, because this lines up with the previous week low. So that's going to be support, and once you violate it, it'll be resistance. You can put your stop loss a little above that, and that'll be, what's that level, is at 151071. But also you could put it above this level here where this fractal is, because that's going to be a strong stop loss level for you. But it'll make your stop loss bigger, but it'll give you more room for the market to move. But with the, like I said, with the news coming up shortly here in what, Thursday, I'd be kind of cautious and wary of this. Now, if we get the breakout, as I said, I would take that and just see if we can ride this market to the downside. No one knows what the outcome of the news is going to be yet, so there could be a lot of different things happening here. So we'll see what happens. But that's what I'm looking at. I really like the breakout here, the Kumo breakout. I would really like to take that trade. So I'm going to monitor this pair and see if I can catch that breakout. And if we catch the breakout, we may be ahead of what ultimately lies ahead of us as the pound gets weaker and falls down to even lower levels. All right. So that's what we're looking at with that pound dollar. I think it's a very interesting pair right now. But if you don't see price get outside of this area here, you can see where it's consolidating, then you're not going to see much happen with this pair until maybe that news event happens, and then be prepared, because anything can happen then. So that's what I'm looking at on the pound dollar. I just wanted to make that clear, let everybody see that, because I think there's a very good opportunity here. So we just have to be patient and wait and see what the market yields us. All right, so that's the pound US dollar. Let's go on to another pair. Okay, so we're looking at US dollar, Swiss franc, and usually on my charts, this is all you see on my chart. You'll just see the Kijins in here with the clouds. I won't have the other lines, but I'm going to put them in here so that new traders who are trading with Ichimoku can see everything, and we can make sure that they realize we are following the rules with this. Okay, so now with this pair, we see we have a breakdown with everything. Price is inside the cloud, so that's neutral. That tells us we're neutral. The market's pretty much ranging when we're inside the cloud, and that's turbulent, so you really don't want to be trading in there on the daily time frame. We have a breakdown here of a dark cloud, so our futures is getting dark. We have TK crossover here, which is bearish, and we have Chiku span below the price. Looks like it's trying to bounce off of the bottom of this cloud. Now the bottom of this cloud here lines up as strong support. You could see we may be starting to look for a range level here, because you have resistance back here, then you violated, and now this looks like it may be support. So I want to see what's going to happen at this level. This level is very vital. So I'm going to go down to the 4 hour time frame, but looking at this daily time frame, everything is pretty bearish, okay, except price being inside the cloud. Once we get a violation of this level here, which is going to be 92,722, then we could start looking for the short trade, and that will be a breakout, a Kumo breakout on the daily time frame. So we can go down to the 4 hour time frame and catch that. If we go down to the 4 hour time frame, we're going to look at that. You'll see that on my charts. Pretty much I have that level on my chart right here. You could see that level, and if we violate that level, so what we're going to look for is if price closes below that level, we take the trade, we put our stop loss. Really, our stop loss should be up at Keynesian or at least this fractal level here. You could shorten it up by putting it at this previous level low here, which is the previous month's low. So you can put your stop loss a little bit above that if you trade the breakout to the downside. Okay, and remember that downside breakout is where this blue line is at 92,722. That's going to fall in line with a Kumo breakout on the daily time frame. So let me take you back so you can look at that and see what I'm talking about. So if we catch the breakout on the daily time frame, this is going to be a daily time frame Kumo breakout. You have all signals bearish, okay, but we're going to enter it on a lower time frame, the 4-hour time frame. We're not going to wait for that daily time frame candle, which would extend our trade, our stop loss even bigger. So we're going to look to violate this level here. Boom, we violate this level, then we can take the trade. Now if price proceeds to move higher, then we're looking for levels where we could bounce to go short, because we want to stay short because all of our signals are telling us that this market is bearish. Okay, so therefore we're going to look for our levels. Now again, we have our levels drawn in here where we look for our pullbacks. These are our levels that we always find pullbacks at. So you have the level here, what I made a zone here, then you have your Kijinsen. So the market can move up to Kijinsen. If it violates Kijinsen, then we start looking for our level here. This is our level that we learned to take trades off of. So we'll go back to the daily time frame. You could see where we put that level. So we put that level in. We started to put that level here. Price, we look for price to pull back to that level maybe, and then we can look for another trade on the 4-hour time frame. So go back to that 4-hour time frame. And if we get that pullback for the 4-hour time frame, then we enter the market short. Okay, and then if not, we may look at this level, the Kijinsen level, and then other than that, we know we're wrong. If we just go up and violate the cloud, then we're going to the upside. We'll have to wait to see. Then we'll reevaluate, because right now we're looking at short on this pair based off of everything that Ichimoku was telling us and the way that the market structure is. You could go to the daily time frame and look at the market structure, and you'll see that basically you probably want to be trading this short. Okay, you can see the overall market structure here. You had a big long uh, candle here that took the whole market out of whack. So a lot of whatever happened here was a big news event that took us out of whack. So that happened with all the Swiss franc pairs, and now finally the market's getting back to normal, and now we're seeing what's happening. We have a breakdown. Looks like the structure is bearish right now. So I want to see a breakdown of this level, and then we'll trade the breakout. That'll be a breakout trade. Put your stop loss above this level here. So you could look at it on all different ways. You could go on your daily time frame and trade it, or you could catch it on this 4-hour time frame if you have your levels drawn in, and then you trade it off of this 4-hour time frame. Everything on the 4-hour time frame is bearish. You have a TK crossover, that's bearish. Prices below the cloud, that's bearish. You have a future that's dark, so that's bearish. And then you have Chiku span below the cloud, so that a Chiku span is below the price, so that is bearish. So everything's telling us take this long, take this short, take this to the downside. Now again, we're a little bit extended here, so if we're a little bit extended or we're looking at a pullback, then maybe we pull back and reach this level here. This is our equilibrium level, the Ichimoku, the Kijinsen, and then finally we find our pullback level here, another pullback level that we put in ourselves, and then maybe bounce off of there and take this short, and that'll be in line for a nice Kumo breakout. We have a jump on the trade, be a really nice move to the downside. So we have to wait and see. We're sitting here consolidating a little bit in a little range. Not much you can trade here. You can't really jump in trades here. You have to get some defined price action and let you know what's happening here, because you have different things happen here. Red green, nothing really defined here. So find your levels where you can find what the market's really doing, where the market's going to talk to you. That's where you start looking at the market, look for it to take trades. Other than that, I put my levels in, I put a price alert, and I know where I want to see the market get to. Once it gets to those levels, I start becoming aware of what the market's doing, and then I set myself up for the trade. You can't watch all these pairs if you don't start putting price alerts. So price alerts will help you to know when you get to that level. You won't have to even be looking at that chart. You could put an audible in and you'll hear it come in. You could be downstairs eating or something or whatever, and then you hear that alert come in, you run up to your computer, boom, get your trade in, and you're good to go, right? So that's US dollar, Swiss franc. We're going to move on. We're going to check out two more pairs. We're going to go Aussie dollar, and we're going to go US dollar CAD, and then we'll be done, guys. All right, so let's move on to the Aussie All right, US so you could see here we're looking at the Aussie US dollar daily time frame. You could see we had a nice move down. So we had a nice long move to the downside, and then we got into a range here. A lot of times what happens, I said before, the market after a big move down or up, you'll find that the market gets into a range at the top or the bottom. In this case, we're at it looks like a range at the bottom, and then we violated the range, but we pulled back into the range here. So I really want to see what's happening here. It looks like we're finding support inside the cloud here at the Kijinsen. So once we found this range, and then we started range trading, we had to be careful of, false breakouts here where we had a couple bull traps, and then we really started to realize we can't trade Ichimoku here again, so you want to be careful of that. But now we broke outside of the range, and then now we can still look, because Ichimoku was still looking good because we got into the range and then we broke out here. So it looks like, just based off of everything we see, you see we did flatten out a little bit, but it looks like price is honoring this Kijinsen here, which is very important. So if price is going to honor this Kijinsen, what it's going to tell me is that we won't drop lower into this range, and we'll be breaking outside of this level, and the move will start moving to the upside. All right, so if we violate that and we fall lower and break out of the cloud here, then we know we're staying right back inside the range. We could take the breakout to the downside off of the daily time frame, and that'll put us back down into the range levels here. Okay, so let's go to the 4 hour time frame, see how we want to really look at that. So with the 4 hour time frame, and we go to this, pretty much looks just like the other chart, or pound dollar almost, but only on this we have a breakout, sideways breakout, and I will not trade a sideways Kumo breakout, but because price is not moving up or down when it comes out of this cloud, it's just moving sideways pretty much. So now I'm really going to look at breaking out down through the level. So instead of breaking out of the cloud, because I don't want a sideways breakout, that is ridiculous, we do have all bearish signals, so I can put everything back on the chart so you guys could really see, but I really don't need them because I already know where we are and what's going on. So once you really understand Ichimoku, you don't really need to put all this on your chart because it looks a little cluttered. But we already know we had this crossover, which is bearish. All right, so this TK crossover is bearish. Price is now on the other side of the cloud, so that is bearish. But I'm not going to consider really being. We are bearish based on everything that you see. The market structure has changed, but we really want to break this level here. So you could look at two levels here. We have the daily Kijinsen, which is going to line up at 78.062, and then we have this previous week's low at 77.917. A violation of this area here really would put us into the downside of this trade, and then we would look to write it down to this level here. So if we violate here a breakout trade, we'll trade the breakout of this level. You could put your stop loss at a few places. You could put it above this level because it's a strong support and resistance level, or you could put it above the fractal here. You could see our future has just twisted over, so we have a dark future, so we look bearish here. We have Chiku span below price. Chiku span may find some resistance when we get down near the cloud, but we'll see what happens then. If we could continue with this downside movement, I really wouldn't take this breakout to the downside until we violate this lower level here. Other than that, you may see price attack back higher. Now if you get a breakout on the upside, you're going to be all messed up with your cloud here, with your signals here, because you're bearish here. You could see you had a crossover, so therefore you won't be able to trade the breakout to the upside, and you'll have Chiku span still inside of price, so that's going to be an issue here. So based off of what we see here on this chart, everything is bearish, so we're going to look for the bearish breakout to the downside and look to get to this level here. So this level here, I put a zone in, and that zone falls in at 75.911 and 75.339. So you may want to put those on your chart and look to see if price can fall back into that zone. Now we know we're wrong if price continues to go sideways and doesn't violate that level. You don't want to be trading it short if it can't violate this level and it's just going sideways. Then what would happen? You may see a breakout to the upside then, and then you'll have to wait for your signals to get back in a line for a bullish breakout. All right, so but until then, we're going to follow what Ichimoku is telling us. We're trading Ichimoku, so everything's bearish. We're going to trade the bearish breakout. We want to see price violate this level here, 78.062, and this previous week low at 77.917. Other than that, guys, we're going to move on. So we'll look at our last pair. This was the Aussie US dollar. We're going to move on to the US dollar CAD, and then we'll be done. All right, guys, we're hitting that home stretch here, but I want to make sure I let you guys see something and show you this. Remember, I told you about the market moving higher or lower and then finding a range before it drops even lower or higher or goes the opposite way. So when the market likes to reverse its direction, it doesn't usually just hit a point and then drop down. So it doesn't just go up and then come down or go down and then go straight up usually. Now, what I'm telling you is not anything written in stone and gold, so it's not going to be all the time. But a lot of times the market will find a range, okay, and you can see this range here. So the market ranges and then it drops. All right. So you could see that, and it's done it on the other chart I showed you where the market came down, found a range, and then is now trying to go higher. Well, now it was coming up, found a range, and now it's trying to go lower. So everything here is bearish. We're going to try to trade the downside movement here. So we got price below the cloud. You see we got a breakout here. We had a false breakout here, and then we had price move a little higher with a retracement, and then price came out of the cloud to the downside here. Now we got another retracement. Now we're looking for price to go even lower. So we have our level set where we can look for a nice trade, but some people are not going to be able to enter the market on these levels because these are big stop losses. So we try to get tighter stop losses. Now I trade certain levels, so when I'm looking at that level and I'm looking at the market structure, I realize where I need to put my stop loss. So it doesn't make sense for a trader to say I'm going to enter the market here and put a 30 pip stop loss, which would may take you around here somewhere. So let's look at that. Well, I can only afford 30 pip stop loss, so I take an entry here and I put a stop loss at 30 pips right here. This is no makes no sense. Your real stop loss would have to be at least above this level here. That's 141 pips, you guys. 141 pips. So you're giving the market 30 pip stop loss when in reality the real level that the market possibly can move to based off of the support and resistance and the market structure is 141 pips. That's what you would have to give yourself to give the market enough room. Okay, so if you're getting into a trade and the technical stop loss, because that's what we like to put our technical stop losses. If that technical stop loss is, say for instance, 100 pips or 141 as it is here, and you try to put a stop loss of 30 or 40, that's something that can be violated very easy. You're just giving money right back to the market. If you can't get into a trade based off of the stop loss being too big for you based and the entry target that we have set up, then you really don't get into that trade. Every good trade is not a good trade. So that doesn't mean just because it's a good trade for me, it may not be a good trade for you based off of your risk management, your money management. So I'm looking to get into a trade at this level. So if I get in here, then my stop loss has to be up here. If I put a 30 pip stop loss, price could bounce here and stay in this area here, take me out a whole bunch of times if I keep putting a 30 pip stop loss. All right, so my stop losses are more technical, and even if I'm following Ichimoku, my stop loss will be way up here. Okay, so that's even bigger. All right, but you can follow market structure and use the market structure to put your stop losses, and that's a real good thing to do. So that's where I would have my stop loss now. So I'm going to look to see if I can get a better entry on the 4-hour time frame and trade off of that time frame. Everything here is bearish. You see my future is dark. I have a dark cloud here, and then I have a TK crossover that's bearish. Here's my crossover happen. It's bearish. Chico span is below price and just below the cloud, and we have price below the cloud. So everything is bearish here. We should be looking to the downside. So if we go to the 4-hour time frame, look for our downside trades, you could see what's happening here. This market moved down, and then we found resistance at the cloud here. Now we're finding support. We're between the Kijun-sen and the Tenkan-sen. We're finding support here. So if we're finding support here, the market may range here, or it may just violate and come through. So I wanted to take a trade at this level, so I'm going to look for a violation of this Kijun-sen, and I'll take the trade. But based off of Ichimoku on the 4-hour time frame, you can't take that trade here because you got a crossover that's bearish, a crossover that's bullish. Your TK crossover is bullish. Your cloud is starting to twist over back to bearish again, so you have a dark cloud again, and your price is below the cloud. So that's bearish, but you have a bullish TK crossover, and Chico span is above this price. It needs to get down here before it's not. So I would probably have a better entry off of the daily time frame where I looked at and just stay in a line with that, because I'm already looking at my entry at this level here, okay, with a stop loss above this level. But if the market decides to retrace even higher, you may see the market bounce off of this level, retrace a little higher. It may come up to this level here where we have this Kijinsen at 123,673. Now it may be a little lower in a few days as Kijinsen moves, but once we find that level where we can trade this short, ultimately we want to be going to the downside. So I'm going to wait for a good trade setup. This is a decent setup here, but I want to see if I can get better. If the better thing would be if price moves a little bit higher and then shows me a better signal. Okay, so then I can get closer to Kijinsen. Once you get closer to Kijinsen and trade, then you can use Kijinsen as your stop loss, and then you also have a lot of room for the market to move. I think ultimately this is going to be a downside move. You can see here daily time frame it's showing you, and we go back to the 4 hour time frame. Now that 4 hour time frame may be a breakout, guys. So what's going to happen? It'll be a Kumo breakout. So just know if you trade the Kumo breakout to the upside, because everything here is looking kind of bullish. You got mixed signals. You got Chico span above price. You got a TK crossover. That is bullish, and you have a future that is turning back to bearish, it looks like, but it can go bullish. So if we get a breakout here, a Kumo breakout, you need to know two things. Really, I wouldn't take the breakout unless we violate this level here. So you want to get above this level here, this fractal level here. You violate that fractal level, you can continue higher and look for a retracement back up to this level. So you're just going to be counter trend trading. So you need to know that. So when you look at the market, you need to know what kind of trading you're doing. Just to get into a trade and say, well, I'm trading a Kumo breakout and that's all I know. But I know if I'm trading a Kumo breakout and it's a counter trend trade and I know where my targets are, where I'm looking to take profit, well then I would look at this level here. Okay, so that would be at 123,673. That's going to line up with the daily Kijinsen. Now if I just jump into this trade and don't know about market structure, don't know that this might be a pull, it's just a pullback probably, then maybe this market, I get triggered, the market goes a little higher, then comes right back, takes me out, and continues with the downside. So you have to be aware of what the market is doing, what the market structure is. It's very important to understand that. And then when you get into a trade, you really know what your whole setup is. You don't just trade based off of Ichimoku signals. I have a signal and I'm taking a trade. I mean, that's a thing for a beginner to do because they don't understand a lot of the things about the market and about the market structure, about support and resistance. And until they learn that, some of these things, just getting these easier trades help you, but in the process you need to learn about the market structure, about support and resistance. You definitely have to have good risk management and money management. So all those things together with the course that I teach, I bring that all together, put that all in one for you. So it's an online video course that I have. You could learn about that if you go to my site fx@oneglance.com and look under the courses section, and you can get the online video course. You take the course and you take tests, and it just helps you to understand all this stuff. But if you already understand this stuff, and just some of the things that I'm showing you here now maybe might be a little bit more of a tip for you to learn how to trade Ichimoku, so that might help you in that aspect. So I want to continue to keep doing things for non-members, so I always like to do this because this is the way I started out, and this is what I'm going to always keep doing. So this is for everyone. So I'm about done now, guys. So hopefully you enjoyed this. Hopefully you learned something from it. And until next time, guys, God bless and so long.